Hey traders, Nick here, recapping the week ending 5/11. Great week for us. See what happens when surprise headlines are not an issue. Okay, so let's start with Friday. Friday ended on a high note. In my opinion, it was a loss for the Bears. Why? Because they had the opportunity in the middle of the day to put the Bulls out or on their heels, and they didn't take it. This is today. This is the S&P ES. Those are the futures, the E-minis. So this was today, opened, rallied, and then we swooned and went to the low of the day, and everything, fear was spiking, and then suddenly the Bulls bids came back to finish at the highs of the day almost. More importantly, fear closed at the lows of the day. So in the absence of new headlines, the fundamentals will win over, and they're still good. Any which way you slice it. I know there are some people that say low volume this and this and that. It doesn't matter, low volume, high volume, it doesn't matter. I mean, I lose money and I make money on low volume or high volume. It doesn't matter. So the fundamentals are still good. The companies are healthy. Not a lot of companies are bloated, at least not the major ones. Speaking of companies, the Friday swoon was all Apple. All indices closed green except for the NASDAQ, barely down 0.05% because of Apple was down 1.5 point at one point, closed down 0.8%. So that all by itself would, if you take Apple to neutral, not up or down, the NASDAQ would have been up just as much as the other indices almost, except for the Dow. The Dow led higher. So, having said that, Friday was a win for the Bulls for sure. A loss for the Bears, actually, more so. Okay, so what comes on Monday? Well, it's the weekend. We don't know what kind of headlines are going to come out, but nothing major is scheduled over the weekend. I think today was the deadline to submit some sort of a comments in writing for the tariff thing. So we're not out of the woods next week. We still have the tariff. That's my primary concern. However, it's also my primary opportunity. What does that mean? It means that if the tariff headline is mild, nowhere near the worst case scenario that we priced in on the way down, we will have a massive rally. That's my own opinion. Okay, that's number one. NAFTA, same deal. They didn't come out of anything. They said nothing. They're going to reconvene on Monday. Some people are going to be meeting over the weekend. So sounds like the low end of the totem pole people are going to be meeting over the weekend with the other guys enjoying the weekend at home. So I don't think anything is going to come out of it before Monday. So these are the two main headlines that we know about. Black swans are always a black swan. You never know where it's coming. If you know about a black swan, it's not a black swan. And it's priced in. All right, so next week, the usual reports. This week, the reports were bullish, meaning all the inflation information that came out was tame. So we didn't have a runaway 10-year, for example. So that wasn't in the news. Regardless, even then, banks rallied. I thought banks would be not rallying, but they rallied fast. All right, so this is Friday on a breakdown basis. Let me zoom out and see. Let's see here. Let's reset this picture with the SPY, which a lot of people are used to seeing. Remember these green zigzags I drew? I drew them when we were down here, and here we are. Almost halfway up. Now this white box I extended because it was a box I had that stopped somewhere on here. That's a scene of a crime. That was an accident scene from which we fell apart tremendously, badly. So we exceeded that 418 high, which I noted earlier this week, and that was a trigger because now we have a cup and handle that triggered technically, so you have some technical buyers that should buy. Let's see here if I can. So if this was a neckline of sorts, and you have a cup and a big handle in this case, usually the rally is about this size. But usually I don't go immediately up there. I look to the left and stopover points. This is definitely one. This is one. That was the neckline. So that's a stopover point, and look where we are. Right under the first stopover point. If that was one, that's two. And if they get to two, why not go for a new high? That's my opinion. All right, so that is the S&P SPY ETF. So what about the other ones? Here are the cues. I shared this with you also. We drew this when they were still down here. And look at that. So now the problem is this line, not the problem for us, the problem for the bears is this line. That's a contention. This was an overshoot, but look, top, they come to it. Is it a top? Dip a little bit and cycle high. The neckline of this cup and handle, this yellow arc, just like the one I drew by hand earlier, this should be the measured move higher. So look, if I put it here, that's about, it's less than the typical technical measured move, but I usually look to the left and see where I should stop. So I expect to slow down here, or at least some sort of resistance. I expect more resistance somewhere around here, and then higher. All right, so that was the NASDAQ. Okay, so what about the IWM, which represents the small caps? This is the most bullish of all of them, and this one is the basket of 2,000 stocks. Again, the arcs are cup and handle. The problem for the bear here is a major problem. First of all, higher lows. The major problem is that the measured move on this one, which in this case I am very conservative, half as much as it should be, because if I were truly technician, I would do this, and that would be the measured move. Okay, so let's not, and keep it here, but keep that in mind, right? It was way up there. So this measured move will get us to that red line, right? What is that red line? Look left. The all-time high, another poke at the all-time high, and look at where we are. I mean, so close to it, and technicians will follow this. If we close above it, I believe a measured move should be the size of this. I will do my homework on some sort of a rising wedge breakout pattern, but I think it's this one. So it definitely would fit with this measured move that pointed higher. So I'm going to say 164 plus. How about that? I am long calls. So that would be the technical way to look at things, technically. Now, we could have a headline next week and all this vanishes. Until then, take headlines out. Fundamentals and technicals should win over the malaise that is currently in the market. So these are the levels. So we looked at Friday, win for the bulls, loss for the bears. Next week, we still have concerns, so I trim. I'm booking profits all along the way. I've been saying it every morning, but I'm staying in my trade, which is biased long. Okay, I just shared a whole bunch of levels, and I'm going to share another video with a whole bunch of trade setups that I discussed today, either in the chat room or with one-on-one questions and some stuff that I looked at. Interesting points today were biotech. Why? Because President Trump, in fact, this may have actually turned the market around, because we were waiting all day. He was going to come out at a certain scheduled time, and we drifted into that time until he actually delivered his speech on drug pricing. You remember, every time he had a chance, Big Pharma is making a lot of money. I'm going to hit them hard. Well, Big Pharma has been punished hard. So down from their highs of 15% from their highs, and still lingering down here. Today the news came out as to what he plans on doing, and it's mild compared to what people thought it would be. So we had a sharp rally in them. In fact, this is one way of looking at them, the IBB. But let me see here. Can I zoom in 10 minutes? 10 minutes increment? You can see that was the end of the speech, or also maybe while he was talking, or sometime. I don't know where. But they rallied right off of it. The news came out, so kind of like sell the news by the event in this case. That's an important piece, because they're a big chunk of the NASDAQ. They're a sizable chunk of the NASDAQ. Who's they? Biotech. We have a couple of tickers for that. IBB and XLV, they're not the same. They're similar. They're not the same. Look into the components. I have a video for that, so make sure to watch it to see if you want to trade it the way I am. Okay, so I'm going to sign out here and leave the video short. I'm still biased long. The fundamentals still tell me higher prices, all-time highs are coming. In fact, they can come as Monday morning in the small caps, because they're already right there. If you have any questions, let me know. sellspreads@gmail.com.